this latest edition of our regular markets review, Breaking the Mould, I'm going to look at 3 things capable of making a real fuss in the coming week. There's a lot coming up on both the company and the macro front, but my suspicion is the real market movers will be airlines, sensors and central banks. Yes, them again, I'm afraid. This is because we will get interim results from easyJet on Tuesday the 10th, a trading statement from precision tools maker Renishaw on Wednesday the 11th, and the Bank of England's latest monetary policy decision on Thursday the 12th. So, let's start with easyJet and its interims on Tuesday the 10th, where boss Caroline McCall will be looking to get back into clear blue skies after a bit of a bumpy period for the share price. As you can see here, the stock's lost some altitude over the last 12 months, despite some excellent operating figures, and one reason, well, that may be the oil price. That's the line that runs against the second y-axis, and as you can see, I've inverted that axis so that when the line falls, oil is rising, and when it rises, oil is falling. That sounds confusing, but it shows much more clearly how over the last 5 years, crude can have a bearing on the airline shares. This makes sense as fuel is around a third of easyJet's costs, and it's fallen as a percentage of total sales since crude peaked in 2013, as this chart shows, looking at easyJet's first and second half results for the last 3 years. Now, oil's rallied by nearly 70% from its winter low, so that's one potential worry for McCall and her team. Investors also need to bear in mind some slightly cautious comments in late April from Willie Walsh, boss of rival International Consolidated Airlines, which runs BA, Vueling, Iberian Aer Lingus. Now, Walsh flagged softer demand following the Brussels terrorist attacks and added that IAG would therefore slow down its planned increases to passenger capacity on short-haul routes. Now, that's something McCall might like to hear. Note that in easyJet's first quarter, its key operating metrics were as follows, so let's how Q2 and the first half stack up. Passenger traffic growth was 8% against a 6% rise in available seat kilometres. The load factor, bums on seats, well, that was 90.3%, and there was a 3.7% drop in revenue per seat on constant currency terms. So that's easyJet. The day after, on the 11th, we got a third quarter update from Renishaw. The Gloucestershire-based FTSE 250 firm dished out a profit warning in March, the second for this fiscal year, and a remarkable change of momentum from 2015 when the company regularly beat analysts' forecasts. Why the change? Well, check this out. It's Renishaw's share price against that of Apple. Now, Renishaw provides precision tools that are used in making Apple's iPhones, and the firm rode a wave of orders from Far Eastern sub-suppliers to the Californian giant as it readied the iPhone 6. Apple's now suffered its first quarterly sales drop in 13 years and its first quarterly earnings drop in nearly 3. So Renishaw will be hoping this year's planned iPhone 7 launch gives things a bit of a boost. I must stress though, there's so much more to Renishaw than just Apple. It's a well-run firm with great products, high returns on capital and actually a broad spread of business across industries and geographies. But markets can be awfully simple things, and Apple looks to be the key narrative here right now. Finally, we got the latest decision on interest rates and quantitative easing from the Bank of England's Monetary Policy Committee on Thursday the 12th. Governor Mark Carney, well, he's likely to leave interest rates at their record low of 0.5% for the 86th straight month, as per the chart, and not add to the 375 billion quid in QE that's been pumped into the economy between 2009 and 2012. The real point of interest, therefore, going to be whether this is the 4th time in a row that all 9 members of the Monetary Policy Committee have voted to do nothing, as any dissent could hint at a shift in policy. But I wouldn't hold your breath if I was you. Thank you for watching, and I look forward to seeing you next time.